Okay, so let me share a screen here real quick, and hopefully this works. And do that. Give me a thumbs up or give me a yes, everything's good if that's working. Gage, you're on mute. I see some thumbs up. See, you guys are playing technology games with me here. All right, good. So yours truly, Lynn B. Thurgood. There's my detail and information. Many of you on the call are clients of the firm. Some are guests, and when we have a lot of our team members as well. So that's my disclosure for your benefit. And of course, this is recorded, so you can always review this later if you want to read all that good stuff. The official disclosure that we offer advisory services through Town Square Capital, SEC registration. We do not provide legal or tax advice, and Oxford Wealth Advisors Insurance Network are independent of Town Square. All right, so first of all, today, what I'd like to do is introduce a little bit of the team that's behind the scenes that you may have some interaction with, but you may not. We have a lot of folks in support of our clients and in our financial practice, and I wanted to give them a little recognition and a plug and a thank you, because as it says there, they're doing a lot of the hard work. So in order to do that, I've got to, let's see here, I got to stop or do another share screen. So this is where things get really scary for me. Hopefully you're seeing my web page. Thumbs up if I'm doing it right again. Okay, good. So on our web page, which is oxfordwealth.com, this is our team page here, Meet the Team. And I wanted to highlight here, some of these folks you already know, you've had interaction with, so I don't need to spend time there. Right here in the middle is Mercy Soto Chavez. She's been with our firm for over 25 years. Gosh, I think it's going on 27 or 28. And she's our agent support specialist. She takes care of all of our customer service and operations. And I want to just, anytime you have a customer service related question, specifically in the New Mexico, but even for the entire firm, that's our main contact there that keeps all the glue and moving our business forward, taking care of our clients and all of our agents. So we appreciate Mercy, and we wanted to introduce you to her. And I think she's on the call. I'm not going to ask her to speak or anything, but just acknowledge her. Miss Michelle Phillips. Michelle is behind the scenes. Some of you have had interaction with her. She really specializes in the investment side of our practice, in customer service and processing of documents and forms and keeping everything organized and straight. So we really appreciate Michelle. She's been with us for several years as well. Gosh, going on, well, I'm probably going to blow it, about 9, 8. You can speak. You're on mute.
13.
Oh, gee, it seems like it was just a week, 2 or 3 years ago. 13, that's what the 3 was. Okay, anyway. So there. Thank you, Michelle. Miss Trilby. Trilby is a marketing assistant and also a fixed annuities life insurance service specialist, processing paperwork, taking care of forms and changes and that kind of thing. Works in the New Mexico office here with Mercy. And here's a good point for everybody on the call. If you're calling the office for Lynn or Gage or Rich or Brandon, those are our main frontline salespeople. For you want to do a withdrawal, or you want to make a change on a bank, or you want to do a beneficiary change or any kind of a service issue, don't wait for us. Talk to the team. They'll get you taken care of in a very prompt and efficient way. So just a heads up there, use these wonderful resources that are behind the scenes. Miss Layla is just part-time with us now. In the past, she had been assisting us. She's now out pursuing a real estate career. Okay, Miss Curie is one of our junior advisors and has worked in the office as well in a support role. Bobby is our office assistant and advisor support in Texas. And so we're glad to have Bobby aboard. So a lot of the folks there in Texas, if you want to go direct, that's who you talk to and get those service and activities taken care of with Bobby. All right, I think that's all, everybody. Did I miss anybody there? Let me look at my little notes here to be sure I covered everybody. Oh, there is one new person that I need to bring to your attention, and he's on the call here today. His name is Kevin. Kevin, I want you to unmute your computer there and say hi to everybody. There he is. He's on mute. I'm not hearing his voice. But anyway, Kevin, can you hear me, Kevin? Say something. Yeah, you're on mute, buddy. You're still on mute. Yeah, anyway, try it again.
How about now? Okay, great. My name is Kevin, and I'm new to the firm and happy to be here.
That's good. Very well done. Kevin is a certified financial planner and a certified financial analyst. Just joined our firm, moved here from Michigan. And today is Kevin's birthday. So happy birthday, everybody, to Kevin. 1, 2, 3. Happy birthday. Okay, enough of that. Let's move on to the next items here. Thanks, guys. On the agenda here, I'm going to go back to the full slideshow. Am I okay? Let's get into the discussion. Tools for financial analysis. I've asked 2 of our advisors to share just 3-4 minute quick overview on a couple of tools that we use. These are complementary that we use in our practice to help clientele. I'm going to introduce, go ahead, Rich, take over and talk to everybody about a portfolio audit tool. And then after him, Brandon's going to join us and talk a little about a risk-analyze analytic tool that we use. So Rich, it's all yours.
Wonderful. Hopefully everybody can see my screen.
Yep.
So yeah, as individuals choose to work with us, I just wanted to share our philosophy on what we call portfolio management. And really what that means is we operate by a set of rules when we assume the management of someone's investment accounts. These 7 rules apply in every situation. We look at it from these different 7 angles. But retail investors typically will not know about these 7 rules. And so we want to just introduce you to some of these rules and then just share with you what the output of an analysis looks like. So we'll try to avoid overlap. We try to look at what we call high active share. We'll introduce what that concept is. We're looking for hyper-focused portfolios that are not really diversified in a bunch of different places. And we avoid commingling of assets, meaning it will introduce you to a term known as SMAs rather than mutual funds or even ETFs. There are some good ETFs and mutual funds out there, but SMAs are something that we focus on. We try to avoid turnover. Turnover increases transaction costs in your portfolio. The last one, Rule 6, know your junk. What it basically means is there are risks associated to bonds. And we certainly have seen that in 2022 as much of the bond market is down about 15%. And then lastly, something that we take very seriously, which is attempting to minimize any downside risk in the portfolios that we manage. So what I want to do next is just show you what an example of a report looks like. So this is the output. If you say, Rich, I want you to run a portfolio analysis, this is what it looks like. We look at allocations. What that means is, what's the breakout? What's it invested in? We will then look at what the structure of the accounts are, meaning, is it invested in ETFs? Is it invested in bonds? Is it invested in individual stocks? We'll look at the credit quality or the credit risk of the bonds in question. Which ones are invested in governments? Which ones are invested in investment grade bonds? What percent of the portfolio are invested in what we call high risk or high yield bonds? So knowing what that risk looks like is absolutely something that we attempt to do. And then finally, some of the things that we'll look at are expenses. How much are you paying for your current advisor to, or your investment advisor to manage your portfolio? There are some fees and costs that are very direct, and there are others that we call indirect. So it's important that we lift that hood and we're able to really do a deeper dive and share with you what your cost structure looks like. Then we'll look at turnover. Turnover is critically important. You may be invested in low cost or minimal cost mutual funds or ETFs, but they may be spinning that account so that you're paying for those transaction costs unnecessarily in your portfolio. That is very much something that we look at. And then lastly, the overlap. What we find is that, let me do an example. Apple, which many hold in their portfolio. If you have 30 mutual funds, many times you're going to find that all 30 of those mutual funds are invested in Apple. So while one mutual fund is selling, the other is buying. That's unnecessary. So we try to be very hyper-focused in our portfolio analysis. And then lastly, we look at performance and risk. That's kind of a no-brainer, but it's important that we dial in exactly what is your risk profile, and then we match that with a performance expectation that equals that risk. And so we look at that as well. Finally, the last thing I just wanted to mention is that in this analysis, we then make a recommendation. We share with you the thoughts and the insights that hopefully will be helpful to you as we go forward. So that's it in a nutshell. This report we find to be very useful. We don't charge at all for this report. It's something that we do for those that are interested, and it allows us to lift the hood and go deeper into portfolio analysis and help you know how well you're structured in your investments. So anyway, that's as much as I wanted to go into, but hopefully that gives you a little bit of a glimpse as to what we do.
Very good, Rich. Thanks. Excellent presentation there. If any of you have questions or would like to have a review of portfolios that you have with us or outside, we're happy to get that type of data to you. Many of you have already benefited from that. Let's turn the time over to Brandon and talk about a tool called Riskalyze. He'll give us just a quick overview. And again, any interest in that, just follow up with us after the call. Send us an email. We're happy to talk to you. Go ahead, Brandon. It's all yours. I don't hear you, so you must be muted.
Yeah, so I was muted. So this works in conjunction with the portfolio audit that Rich just went over. This brings it down into a little bit more personal level. Riskalyze is a software that we use to ultimately see what type of risk that you're taking within the account. We have many clients or prospects that come to us and say, yeah, I've talked to my broker, I've talked to my advisor, and I'm conservatively invested. And so we'll break it down. We want to make sure that the definitions of the advisors, the definition of the advisor's word of conservative is the same as yours. And that's what Riskalyze allows us to do. Very unique risk software here, to where typically what we like to start with here is having you fill out a questionnaire and you set your risk tolerance. And so it will throw out a risk number. And once we do, after we have your risk number, what we do now is then we enter your current holdings in your current portfolios to see if the risk that you're taking within your portfolio matches your risk target number based off of the questionnaire that you filled out. So what we're able to do in the software is input all of your accounts with all of the holdings and all of the different amounts within those holdings. And it gives us some information, gives us some analytics here that we look at to make sure that your portfolio is in alignment with the risk that you want to take as an investor. So it'll shoot out an overall portfolio risk score of 58. And the risk score is on a range from 1 to 99. 99 being, the absolute most aggressive, and 1% basically meaning there's no risk at all in the portfolio. So it's a very unique software that we are able to use there. And going even further on that, once we have that inputted, we can compare that to models that we might recommend for you and to see how they're performing in comparison. And so we can go back in time and compare how these models would perform, benchmarked really against yours and other benchmarks within the market. So under this scenario, the idea is we want to reduce or lower the risk and try to get as much return as you were and or have less risk and outperform. So one of the things that we'll focus on is you'll see the current portfolio for this particular client was at 58. And then we have some models that we've just built, and we've lowered the risk score from 32 to 43, depending on the type of model. But what we want to focus on is this drawdown and the total return. That's the most important thing that most investors are concerned about. They want to reduce their overall risk, but by reducing risk, we don't want to give up all the return and gains either. So when we do a comparison with everything, we look at the drawdowns and we see that all the drawdowns are fairly similar. We've reduced the drawdown on this conservative model from 19 to 15. But the important part here is even with taking less risk, this particular model has outperformed the current portfolio. So those are things that we focus on within Riskalyze and that it allows us to utilize. So if you haven't filled out a risk questionnaire, let us know. We can get that sent to you. We send it in an email, and it takes maybe 5 minutes to do that risk questionnaire. But it's just a little bit more in-depth, focused solely on that portfolio.
Great. Anything else, Brandon, you need to add, or?
I don't believe so.
That's perfect. Well done. So great tools and great teammates here that are very, very versed in that activity. So now I need to go back to my share screen and let's see what I can do here. I hope I'm back to where I need to be. Let's go ahead and move to the next screen. A couple of quick items I want to address. MYGA, multi-year guaranteed annuities, a bank alternative for lazy money. Right now, a 2-year multi-year guaranteed account, multi-year guaranteed annuity, you can get about a 4.2% guaranteed rate per year, no fees, no risk. It grows tax deferred. That's pretty good for a 2-year. What are you getting at the bank or the credit union? The 3-year is paying 5.3 per year. So if you haven't heard about these, please inquire and get educated on that for what I call lazy money. For you, for your parents, for your kids, for your work associates, for your family, for your neighbors, everybody needs to know about this. Treasuries right now are paying a pretty good rate, in the north of 4% for just 1 and 2 year treasuries. That money stays liquid, where the multi-year guaranteed are limited liquidity during that vesting period of 2 or 3 years. Please be sure, let me just share with you very briefly a recent client experience. I'm working, and this has happened to me many times, but even just reinforced recently. We have a client that loses a spouse, and our opportunity is to provide service in filing claims and gathering assets and helping those survivors with figuring out what their cash flow is going to look like. Are they going to be able to pay their bills? What does all this money mean that's coming from insurance or investments and pensions and retirement accounts? So that's one of the activities that we provide, of course, on the back end. On the front end, we're putting money to work. We also provide a lot of service on the back end of, taking care of your beneficiaries. Make sure your beneficiaries are up to date. It's very common, especially on old investment accounts or even old insurance contracts. We forgot to update the beneficiary. This one client recently, there was a bunch of savings bonds that were in the safe deposit box. Well, all those savings bonds do not have the spouse or his kids as beneficiaries. He bought most of these before he was married, and they had beneficiaries of his mother, who's almost 90 years old and in hospice care, and brothers and siblings and everything else. Well, that's going to go to them. Life insurance, he had a life insurance policy on him that his mother was the beneficiary on, never got updated. So always be sure you're updating your beneficiaries on all your assets pursuant to marriages, divorces, etc. Because if you don't, look, whoever's on the beneficiary, that's who's getting the money, period. And if they have passed away, then you've got a bunch of problems ahead of you. All right, legal documents, power of attorney, medical, financial. Please be sure you're dusting those off and keeping those current. And then I'm trying to put in a plug there with a Google review. Give us a Google review. We like to get some positive feedback, and if we aren't doing a good job, well, tell us that too, but don't do a Google review. I'm just kidding. We just want to make you aware, because nowadays a lot of folks look at Google for who are these guys? All right, some quick tax planning strategies. Again, limited time, just some 5 bullet points. 1, asset allocation. That's critical to your tax consequences. Pay attention and talk to your advisor about how are you allocated asset-wise and what impact does it have on your taxes. Qualified contributions. Make sure you're maxing out your 401k, your IRA. Incorporate the Roth into the planning of those things. Qualified charitable donations. We've talked about these a little bit on some of our OWA live weekly snippets that we put out. A great way to redirect RMDs, required minimum distributions, from being fully taxable to being tax-free, as you appropriately direct that RMD to a qualified charity. Many of you donate to tithe, etc. Well, golly jeepers, let's do it to where we get a tax advantage for that. Tax-free exchanges, just a great way to move money from one place to the other without paying taxes. Pay attention to that. And then, of course, tax planning within trusts. There's grantor trusts, annuity trusts, other types of trusts that can have a tax advantage as well. That's all I'm going to say about that. Just be aware. If there's a question on it, talk to your advisor. We're happy to help. All right, let's get into a quick market update here. We're running on about 20, 25 minutes. We want to keep this less than 30. And everybody on the call, especially my team, are just, holding their breath that Lynn B will shut up in time. Look, the average bear market lasts about 1.2 years and drops by about 38%. And it lasts about 5 years on an average bull market. So look at that. Bears are short-lived and pretty good drops. But boy, look at those bulls. Right now we're in a bear. I don't think anybody would disagree with that. We've had a little bit of recovery, a little bit of relief lately. Be careful. Don't get fallen asleep. I think that there's more volatility ahead. Just be aware, but understand the nature. Don't jump. Don't get emotional on money that you don't need right now and end up forcing yourself to absorb losses. A year or two after the low, we don't know where the low is yet on this particular market. Have we hit bottom? I don't think so, but who knows? But when it does hit bottom within a year or two, boy, the returns are significant. And if you jump emotionally, you miss those returns. That's just not a good scenario at all. Brandon did a thing here a while back on zombies. These are companies with, I guess it's Warren Buffett that coined the phrase, it's only when the tide goes out that you know who is swimming naked. There's a lot of companies out there referred to as zombies that have all kinds of revenue, and boy, they look great, and they have no financial foundation underneath them. And now we're finding out who those are. Be very careful where you're invested. So real quick, the economy is slowing. The Fed has been doing their thing with the raising the rates to try to slow things down. Some inflationary pressures are slowing down. Supply chain and stuff are starting to improve. Housing's been cooling off. I've seen it was down about 20 to 30% in some areas from that high. Earnings are going to be lower than estimates, but not dramatically. There's some tailwinds and there's some headwinds coming at us. We have a much higher probability of a shallow versus a very severe recession, but that's just probability. Who knows? All kinds of things could change. Gosh, anybody been paying attention to the news lately? What's going on in China with their COVID zero tolerance issues and what kind of impact that has? It's nowadays we're so interrelated that if something happens overseas, we're all impacted in one form or another. So be attention, pay attention, be careful, pay attention. The Fed's not done hiking rates. They'll be meeting here in about 2 weeks, but it is tapering, I think. So we'll see how that goes. Stocks could go lower, and of course they're willing to lower the rates to stabilize things. what we like right now, okay, inflation is softening. Earnings trend is solid. Q2 actually came up a little above what was projected, so that was good. Labor's good. It's crazy though to me, where you have this low unemployment, and yet everywhere I look around, they're saying hiring, and they have limited hours because they don't have enough people to fill the schedules. So I'm just scratching my head, going, I'm confused. I don't know if you are. Cash is everywhere. Cash is everywhere. And that's why we talk about this lazy money. Gosh, put that money to work. Don't just leave it sitting in the bank earning 0 point nothing. Balance sheets, corporates, and so on and so forth. I'll let you read that. We're worried about the inflation in food, rent, and stuff like that still hurting. If the Fed over tightens, ouch. We'll see. We'll see how deep this recession really becomes, et cetera, et cetera. So just be aware of. Yeah, and there they talk about the China and so on and so forth. Russia, I mean, good grief. There's crazy times. So just be careful, be informed. Here's the bottom line. Rebalance the portfolio as needed. Okay. If you're too heavy somewhere, fix it. Don't be complacent. If you don't believe in something, then get rid of it. If you don't understand it, get rid of it. Be very careful. Bitcoin, cryptocurrency. Gosh, we've had some weird noise on that lately, and you've got some on this end saying the sky is falling, and you have some on the other that say, oh, well, that's just a little blip. It's still very viable and valuable. You're going to get all kinds of opinions. Just be informed. Own good, high quality stuff. These analytic tools we just showed you help you do that. There will be volatility. Look, the S&P averages a 14 drop every year. So there's a lot of intra-year movement. That's normal. Look at alternatives, take advantage of volatility. All right, I think that's about it there. Look, that's it. My disclosure is simply that we're going to give you the best advice we can, and we're going to try to keep everybody happy and healthy and sleeping good at night. And that's really all I need to say there. Let me end this show with a quick uniform change here. I want to get a little bit more festive as I say to everybody, hang on a minute. It worked a lot quicker when I did it in practice. There we go. I want to wish all of you and our staff a Merry Christmas, a Happy New Year, Happy Holidays. We appreciate you. We pray for blessings of peace, of prosperity, and health upon all of you. And until we meet again, stay well and enjoy the beauty and the precious blessing of life. Bye for now. I guess I shouldn't say bye for now. Are we supposed to field some questions?